Welcome to the Growth Advantage podcast, where we dive deep into the strategies and mindsets that drive successful businesses forwards. Today, we have a truly insightful conversation lined up with Mustafa Khanwala, the visionary CEO of Mishipay. Founded in 2015, Mishipay has been at the forefront of retail innovation, constantly evolving with the latest checkout trends. Mustafa, welcome to the show. It's great to have you here.
Thank you for having me, Rebecca. Great to be here.
Fantastic. I'd love to start by asking you to introduce yourself and explain to the listeners exactly what Mishipay is.
Yeah, of course. I'm Mustafa. I'm the founder and CEO of Mishipay. It's a business I started, as you said, 10 years ago, more than 10 years ago now. And the idea for Mishipay came from me actually waiting at Lidl in North London in Tottenham Hale for 20 minutes to buy just a single can of Coke. And I thought that doesn't make any sense, right? Surely what's possible on the cash register should be possible on my phone. And that's how we founded our first product, right? The Scan Pay and Go, where a user can scan the barcode of an item, pay for the item, and leave the store without having going to a cash register. And that since then has evolved today into a full POS system, right? About 4 years ago in 2022, we launched our self checkout kiosks, then our cash registers, mobile POS, RFID self checkout. So today we have a whole suite of solutions that allow the customer to check out in the store in possibly any way that you can imagine, right? So a mix of hardware and software solutions. We still manufacture the software, but we work with several other hardware partners to deliver self-checkout kiosk, mobile POS, cash register, RFID self-checkout, and still the Scan Pay and Go, which was the first product, is live. We're in more than 2,000 stores from the west coast of the US to the east coast of Australia, so we have a very large footprint. And we work with some of the largest retailers, particularly in their sector, like Avolta, Dubai Duty Free, Muji, Flying Tiger Copenhagen, and many others.
Fantastic. So you say you were founded in 2015 and Mishipay has been evolving with the latest checkout trends. Can you describe what growth truly means for Mishipay today and how that definition has changed perhaps since the company's inception?
Yeah, for sure. The first thing is the definition has changed a lot over time. In terms of what is good growth, or what is the right level to aim for. The definition in and of itself has not changed, just the growth year over year, and definitely now much more focused on revenue than overall valuation or number of products deployed or number of stores deployed. We used to look at those numbers a lot more. But really it's on two pieces. The first store actually went live in 2018. That was when we started with our first store. So it took us like 2.5 to 3 years to get to our first major retailer pilots. We started that from 2018 till 2022. We were only with Scan and Go, right? So our job was, making sure we get maximum number of stores on that platform. But from 22 onwards, when we started to deploy the physical checkout solutions with the hardware, self checkouts, and mobile POS, then we've been looking a lot more at the number of devices deployed. That started to change. We also, in about 2023, started to do a lot of our own payment processing. So then we started to look at the total number and value of transactions that we process. So last year we processed, hundreds of millions of pounds through the Mishipay platform. That number is becoming more and more important because going forwards, it's where a majority of our revenue comes from, right? So we look at it from a vertical perspective to understand, which products are generating the best revenue and how much we generate from payment processing and subscription. And then we look at it from a geographic perspective to understand each market: US, Europe, and the Middle East. These are the three major markets that we operate in. APAC is just starting to come up from this year. We also went from, obviously we were having triple digit growth in the early years, more than 100% year over year. The last couple of years, we're more looking at, 50, 60% growth year over year. And with profitability, we were profitable in the month of December last year, December 2025, and the whole year 2026 as a full year will be profitable. So that's another important factor for us. So, we are now at the stage of maturity where we need to be above the rule of 40, right? Very important for us that the sum of our growth and our profit slash loss has to be over 40%. We will hit that number. We'll probably be over 60% this year. And that's a very important, milestone for us to hit.
Amazing. What does Mishipay's growth look like for you over the next, say, 12 to 18 months, particularly with your focus areas of, say, North America, UAE, and the UK and Europe?
Yeah, so overall, I think we're already headed towards a large growth for 2026. We know it'll be over 50%. The real value will come in terms of how close to 100% can we get it, right? But while still maintaining profitability, that's the one thing that we cannot compromise on this year. So we're already headed towards more than 50% growth. We're aware of that because of the contracts we've signed, because of the stores we're due to deploy this year. So that's a good level. It's a sort of the base level of growth that we're aiming at this year. And then we have the higher projection towards 80% that's possible if a few contracts land our way and a few of the deployments actually can get done this year, because most of this growth is driven by our large retailers, right? So 20% of our customers make up more than 80% of our revenue. Those are our big customers who are deploying, hundreds of devices. Those are very important towards that growth goal, right? So this is on pure revenue. The profitability goal is just anything that is on the profitable side. We're not aiming towards a certain percentage this year. That will be more for 2027. But this year, above break even is what we're aiming for. And then the final piece, which is the total GTV process, this year we're aiming at more than $500 million. So we already have the path towards that, and we think it could be even higher, but that's our base level projection on the total transactions process.
Fantastic. And how is Mishipay positioning itself to stay ahead of the curve in the evolving retail ecosystem? And what do you predict the checkout experience will look like in the coming years?
I think, look, on our side, our biggest value comes in our agility and flexibility of the platform. Because we were built mobile first cloud native to begin with Scan and Go, that allowed us to have a structure that is extremely integratable into the retailer's existing infrastructure without them making any change, right? So it allows us to just plug into their systems. They don't have to invest in making changes to their infrastructure, and we can still give them a great front end. To do this, normally the retailer has to upgrade a whole ERP POS system. You're talking about a project that takes years, costs millions of pounds, and still probably doesn't achieve the result, because the only guarantee is that the technology of today will not necessarily will definitely not satisfy the customer experience requirement of tomorrow.
Yes, of course.
We know that that will be the case, but we need something that can quickly adapt to the changing needs, right? There's a new wallet out there that the customers want to use. Let's get it integrated. There's a new loyalty system they want to use. There's a new promotion style that they want to do. Our job is to make these changes quickly. So we can launch a new promotion scheme in 2 days. We can launch a new loyalty program with the retailer in 10 days. We can change the payment provider in 2 weeks. That kind of agility just doesn't exist with the traditional POS landscape, right? So for the retailer, it's about having that adaptable, flexible front end, but while maintaining the core element of their ERP that they have with the legacy provider, right? So our real value comes where you don't need to do a full refurb and upgrade, which is very time consuming and costly. Instead, you keep the legacy where it is. It's still good for your product file, your promotions, your POS information, POS logs to sit there, and let us integrate and create a front end that's flexible, right? That's what I see the stores actually changing. Our biggest value comes there, and what we see is much more customer experience elements being able to switch on the front end. So you've already seen this with RFID in checkout, RFID in the fitting rooms. I think you will see a lot more of that happening. And really, the store front end for checkout will change into really divide into two areas. The first is on convenience, which will be all about customers checking out as quickly as possible. They know what they want. So, how quickly can you get them through and purchase what they like? Because today the store experience is amazing in terms of browsing, discovery. The users find what they want, they love it. That's the peak of their journey. From there, when you add barriers to checkout, you walk to the cash register, you wait there in line, and then you pay. You're giving them a bad climax, right? From a great journey. What you want to do is close them at the peak, which means that either I decided to buy, Now let me buy as quickly as I can. So self checkout on convenience side. But the other end of the equation is the experience, where a user wants to talk to a staff, where a user wants to spend time in browsing, wants to be recommended items. Just like you see online, people who bought this also bought this. You need much recommendation. There we see the mobile POS, very similar to the Apple Store experience. We do it with a lot of our customers, where the staff is empowered with staff facing devices, but the checkout can happen anywhere in the store, right? It
Right.
does happen at the checkout area. So I really see that, these two elements, those customers who want more time spent with them, need being sold to, will want to spend more time, but spend it in the area where they're browsing rather than the checkout area. And those customers who know what they want, get them through the store as quickly as possible.
What specific trends or innovations are you currently focusing on to ensure that Mishipay remains a leader in the transaction space? And beyond core product innovation, where do you see the greatest opportunity to perhaps leverage automation to accelerate growth?
Yeah, I think there are a few elements perhaps that I haven't talked about. For sure, the storefront, as I said, will switch to either self checkout or mobile POS, right? And you will see fewer and fewer cash registers. That's how the landscape will change. You will superimpose on that the customer experience elements where AI will play a role for sure in item recommendations and front end for the user, but also a lot more back end capabilities where we're innovating. Excuse me. Because what we see is that today, a lot of store managers, store assistant managers, people who are actually on the ground don't have information and insight for decision making. They're the people who are actually spending the time with the customer and can make the most effective agile change, right, by changing price, adding promotions. But for them, if that information has to go to the headquarter, be looked at by a business analyst team who's using Power BI, then come back with decisions, there's just too much time and too many layers in the middle.
Yes.
Instead, if the so our job is actually adding AI to our analytics capabilities with a chat. This is our latest product that we're launching, which will allow store managers to actually talk to the data with natural language, similar to what you would use in an online LLM capability, but in our dashboard with the data of the retailer to be able to ask best selling items, worst selling items, recommended promotions. So, level one is really insight, but level two from there is actually being able to do action. So if the AI is recommending a price markdown on these 10 items, we want them to be able to mark the price down by clicking one button, right? Then
Yeah.
third area of innovation will be how to change the price labels, because if that's still manual, so that's where I think that you'll see a comeback from ESLs, electronic shelf labels, which will come back to play a much bigger role inside the store, because they've been around for many years but haven't had the best adoption. But these new
Right.
capabilities will give them more reason to the retailer to have electronic shelf labels as well.
Absolutely, it totally makes sense to sort of go down that route. It seems so old fashioned, doesn't it, to actually be having the manual price labels still at this day and age being put on those shelves.
Cost versus the ROI. For a long time, shelf labels electronic, the cost was so high that the retailer didn't have a way to make sense of the value. But if they have AI capabilities now to change price and to understand what to change, you can also have the ROI baked into that, right? So that if you make a change and accordingly you've increased sales, increased profitability of the store, you can see directly the value created by those shelf labels. The other areas obviously on the side. So you're seeing obviously card has taken over, cash is starting to become less than 10, even less than 5% in several places. In the UK, we have so many of our retail stores going complete cashless because the law allows them to do that. The next step from there is starting to see other payment capabilities in terms of wallets, right? That's something that's not yet hit the Western world, Europe and the US, but you've seen amazing adoption in places like China, places like India, with UPI, WeChat Pay, all these kinds of things. We've had open banking available in the UK for a long time, but it hasn't had the same moment like contactless cards had with the 2012 Olympics, right? There hasn't been a super sticky use case to get them. And that's because we had wallets like Apple Pay, Google Pay, which are a more superior experience in terms of, just putting your Face ID and tapping rather than scanning a QR code, entering the value, and then making the payment. So if
Yes.
we need a better user experience element on the front end, But once it has that, I believe that will make a comeback also inside the high street, because it is fundamentally much cheaper to do those transactions. So the merchants have a definite need to bring it there. It has to come with the right customer experience for the users to adopt.
Absolutely. And regarding internal processes such as sales and marketing, do you see where AI automation could fit there?
We're already using it, right? In terms of a B2B perspective, it has made getting contacts, enriching our SDR outreach much, much easier, right? The same number of SDRs can book a lot more meetings, right? I would say it's probably at least 2x already, right? With the number of email outreach that they can do and the number of chats, like in terms of LinkedIn and other outreaches. It has also meant that we focus on the customers who do want to buy, right? Because that's a big part of the sales with startups, is that if you get into the usual sales cycles, it's very, very difficult to win because the cycles are so long. The big companies have the ability to wait for the customer to be ready. A big job of a startup is actually finding the customer who is ready to buy and who has a need for the product. And then, of course, if you have a superior product, you will win. But just finding them and getting in front of them was the harder piece, which AI is giving far more ability to do far more cheaply than before.
Fantastic.
Any startup, I've said this before several times, that startups die in the land of maybe, right? If that's a maybe from customers, investors, or talent you're trying to hire, want as quickly as possible to qualify out and qualify in your pipeline in each of those three areas, right? You want to know who's a no as quickly as possible and who's a yes, so you focus your time and attention there. That's another place that AI is giving a lot more info before a meeting or before an event so that we can learn and know where to focus our energy.
Fantastic. That's a really positive use that you're finding with AI there. And you recently secured a significant investment. What are the key strategic initiatives that this capital will fuel, and how will it accelerate your expansion plans?
So our capital is roughly divided as, about 70% on expansion, which means, sales, marketing, and engineering capability towards delivering on those customers. Existing customers expanding. So every year, typically about 80% of our sales increase year on year comes from existing customers expanding, right? Because if you think about it, 1,000 store retailer will start their first pilot probably with 10 stores. And with the performance of that, we get on a rollout plan to get them to 100 to 500, eventually 1,000. So that is a very big part of our sales. The 20% that comes from new sales are new customers who may not be very big this year, but will be part of that expansion next year and the year after, right? So that's why a big part of our sales and marketing is also engineering capability to deliver on existing customer expansions and to find the new customers. The remaining 30% from the original, the money and budget that we do, we put towards new innovation, right? Because we know we're only as good as our next product, right? And that has to keep coming. We went from being only scan and go to adding self checkouts. We went from only self checkouts to mobile POS. We added full POS capabilities, then we added full payment capabilities. Now we're moving towards that next step, right? Of also adding full analytics capabilities and ERP capabilities eventually. So that will be very important to keep expanding the breadth of our solutions so that we can keep delivering more to our existing customers, not just in terms of more number of stores, but more role we can play within those same stores and value that we add within those same stores. So that's where we would focus it. But yeah, it is 30%, not the larger piece, because a big part of our next steps is to make sure we keep growing and increasing our profitability.
Of course, absolutely. And what are the unique challenges and opportunities that you're seeing in scaling operations across such diverse markets, such as North America, UK, Europe, and the Gulf countries? Do you employ different growth strategies for each region?
Yes, yes, for sure. We have to. And it's certainly far more complicated than I'd like, right? It would be amazing if all of our customers, all of our stores were just in one country. Then it would make things far simpler for us. But this is the way our growth has happened because of where we saw the key opportunities, right? We look for the markets that have certain factors like payments capabilities, where, as I said, cash is hopefully less than 20 and preferably even less than 10% of the total transactions. We look for where POS and ERP systems are at the point where we can at least integrate to them, but there is legacy that requires renovation, and we come with the alternative. And finally, we look for where the cost of labor is high enough that there is value in empowering them with mobile POS, or and switching everyone who wants to do self checkout towards self checkout. These are the factors that require a new market for us to come in. In each market, there's a different mix of the same elements but different level of budgets assigned to them, right? So certain markets for us will be far more events and trade show heavy in terms of the marketing budget and the growth budget. Certain markets will be far more focused with SDR outreach in terms of cold calling and cold email and LinkedIn outreach. In certain ones, we may not be doing any of those and just be expanding through referrals and partnerships. So we have resellers and distributors in certain markets, especially where language is a big requirement, where the culture is very specific to that country. Then we know that it's very difficult for us to hire our own team and see success. It will take far longer and be far more expensive. Instead, we work through our partners in those regions. So that's where each region we look at, and our three key ones: US, Europe, and UAE or Middle East. We have direct sales teams on the ground, but the rest of them we expand through partners. Even within these, like Europe and the US, they're very, very big markets. So certain ones we go direct, and certain ones we work through our distributors and resellers.
And how are you currently managing the volume of new lead follow-up and qualification and nurturing? Then what bottlenecks are potentially in the current sales and marketing workflows that prevent you from scaling even faster?
Ooh, I don't know if there is a necessary bottleneck at the moment. I feel like we've scaled up, especially with the last round of financing, the recent growth. We've scaled the team to a level that can handle these leads. We will continue to expand our team in terms of BDMs, and we're also this year bringing on a head of sales as well, which will be very important at a C level to have someone responsible for revenue across the business, across the world. So that will be very important in terms of structure. I feel like we are at the point now where we have that one or two missing links to fill in Q1, Q2 this year. And then it's just a matter of adding more heads to scale, right? Certainly here AI has also played a role. So the required heads for the number of customers you wanted to sign used to be much higher than it is today, because several things have started to get more automated, which means that the same salesperson can take far more number of meetings, generate far more number of proposals, and close far higher number of deals than they used to be able to do, right? Especially on the medium and smaller categories of customers on the B2B side. I would say with the larger, it hasn't yet played that big an impact. So, enterprise clients are still the same number of deals per salesperson and all the corresponding leading indicators. But in small and medium, it certainly played a big part. So we don't need as many as we would have before.
Looking ahead to the next, say, 18 months of expansion, what do you see as the biggest challenges that you may be coming across, and what's your strategy for dealing with anything that comes that way?
So scale will certainly be one, right? We're coming to the point where with hundreds of millions worth of transactions processed, we will need right capabilities in certain markets. We're coming up with required regulations, required security infrastructure as well. So that's an important piece for us as we mature and become bigger, right? Which will be a required part of becoming bigger. The other piece which is important is, and to be figured out for us after we have the head of sales and the structure for head of sales, is because we have such a large geographic reach, understanding in each markets the kind of teams we need to hire and how they will report into the main business. So that will be another piece for us. And of course, the usual, which is the constant moving goalpost in retail stores of customer experience requirements, right? There will always be new things and we just want to make sure that we don't fall behind the eight ball in terms of making sure we have those latest innovations with us, right? So I think those are some key challenges. We also face, the challenge that most other industries face is that we have certain players who are continuing to consolidate more and more of the market share and the scope, right? So you have very, very big players that we partner with a lot and we integrate to, but they want to take, just like we do, more and more of the share. But their scale is so big that it allows retailers to stay within just one ecosystem,
Right.
and they get locked in there. So that's another thing that's starting to look, potentially like a challenge, and we have to figure that out.
Mishipay deals with transactions on a second to second basis. Given the volume of real time transaction data that you handle, what systems are currently in place to automatically translate those insights into actionable marketing campaigns or, say, personalised sales follow up sequences? And are you satisfied with the speed and scale of that data to action pipeline?
No, I'm not satisfied. I'll answer the last question first. Never satisfied. That's the point, I guess, for us to move forward and keep innovating and improving. Certainly, this is an area for us to improve, right? We're still at the point where a lot of this is manual today, where we not in terms of the transaction insights that has always been automated because we have to get our transaction info back into the retailer system so that they always have an accurate view of their inventory, their sales attributed to every store, their reconciliation and settlement reports. But what we do from that at the moment is the manual part, right? That we take insights of our performance inside the store. How did we help either increase sales or reduce costs? And really, it has to boil down towards that and then create a case study from it. Actually, this quarter onwards, we're just starting with the chat capability that I told you about in our dashboard in the back office for the retailer to see this automatically and also for our own teams to use it, right? For insight and ideas for how we can tell other retailers, look, this is where we add value. So that's our next piece, is actually seeing the kinds of insights that we may not have even known to look for, right? That's where we're looking to use AI capabilities, because the ones that we know we have a direct impact on through conversion rate and improving average basket value, reducing the number of cashier stations in a store, we're aware of this, we know to look for this data. But there could be other value add that we're doing that we don't know to look for. That's where AI could be very interesting for us, and that's what can be fed into our marketing channel. So I would say the last 6 months have been very important. We've started to build a lot more structure around having a marketing team, an SDR team, a BDM team, account management, and customer success. We're at that size now. The data that we fed back to these teams to create new case studies, create new contents, and referral for retailers who will be interested in the value that we've generated. That's the next piece for us to add structure and automation to. So we're not quite there yet, but I believe by end of this year, so we're already working on it this quarter. It'll probably take another couple of quarters for it to evolve and get mature. By the end of this year, that should start to become a lot more automated, where insights from the stores will directly fill into our marketing content for us to generate, posts and videos and case studies more automatically.
Absolutely. And that's great to hear how, you're sort of building that into the growth of the business going forwards. Given your focus on transactions, how does Mishipay navigate the broader fintech landscape? And do you see opportunities for partnerships or further integration with the financial technology sector?
For sure, for sure. We already have a very big couple of partnerships on payment processing, right? Which we work on the rails of our partners, taking their payment processing, and being able to offer that as a package within our product, so that we have a much more aggressive subscription pricing if we take the payment processing of our retailers. And so far, all of our customers have really appreciated that. More than 90% of our transactions that flow through Mishipay are going through our own payment processing with our partners. The next step there really will be on a lot more of the payment methods on the front end, and the um, settlement structures on the back end, right? And more specifically on the front end, like I said, it's coming up with direct bank to bank payments. Call it open banking in the UK, but the more important idea there is trying to do direct payments and buy now, pay later starting to come into the store. You already have some markets like Australia, which have done really well there, right? Where they have far more percentage of their in-store payments towards buy now, pay later options than we do in the UK or even in the US. I think there's a still a lot more growth there, but wallets will be a great way to get that, right? Same thing for open banking. The use cases are important so that you can find a really fast user experience equal or better than what you can do on your Apple Pay, Google Pay. That's what will unlock that opportunity. And we're very keen to keep finding ways to bring that into the picture. On the back end, in terms of settlements, I think there's a lot more happening in terms of stable coins and microfinancing for the retailer, which is starting to become interesting. So stablecoins, of course, offer a great way for the retailers to perhaps increase the value from the settlement that they're supposed to get, but also the access to microfinancing is starting to increase with a lot more payment processing players also having banking capabilities, right? So they can offer, based on the flow of transactions, a lot more micro loans to the retailer in a store by store basis without the need for the traditional credit checks and collateral and everything else. So it allows financing to improve a lot more. And there's a value there from crypto as well that they could get.
Fantastic. And finally, Mustafa, what is the mindset or philosophy that has driven you as the CEO and founder from 2015 to build and lead this international expansion?
The mindset, I guess, look, the first most important thing is resilience, right? That's a factor because the truth is success takes far longer than most founders think or imagine from the early days, right? I was 22 when I started, and I was definitely very enamored and glamorized by the TechCrunch headlines and those things that I was reading. This so and so startup raises 100 million, so and so startup raises 200. And it's happening even today, right, with a lot of the AI startups. The mindset for growth is really being able to shut out that noise, be resilient because there will be constant pressures and hits that you will take, right? Every 5 steps you take forward, you will be pushed back 2 steps, right? And that's the way that you have to be ready for that constant barrage of issues and problems hitting you. What is important though is that the problems themselves will have to change, right? I'm not saying I'm any less stressed today than perhaps I was 5 years ago or 10 years ago. But the things causing me stress are different, right? They're bigger, more complicated, more interesting challenges that I deal with. And that has to happen, right? If you don't get that and that win every once in a while to keep you pushing forward, then it's very difficult, right? To have that growth mindset. So I think resilience, you start with that. You start with the ability to make an impact directly with your work, but you need to see results every once in a while that keep you going, and you need to see the problems themselves evolve as you grow, right? So as that happens, you continue to seek more and more growth in order to really evolve yourself as well.
Fantastic. A huge thank you, Mustafa, for coming on the podcast today and sharing such invaluable insights on growth and market trends and strategic expansion. It's really clear that Mishipay is not just adapting to the evolving retail ecosystem, but actively shaping its future through innovation and a keen focus on customer experience. And I wish you every success in the future.
Thank you so much. Appreciate that.
Brilliant. It's been great to have you on today. Thank you.